In this video, we'll cover Section 3G and Section 3H. Section 3G explains how the seller can pay a portion of the buyer's expenses and closing costs. This section helps structure seller credits correctly and reminds agents that these credits do not include buyer-broker compensation. Then we'll move to Section 3H, Verifications, which outlines the buyer's responsibility to provide proof of funds and financial capability, confirming that they have the necessary down payment and closing cost funds to complete the purchase. Let's get started. Section 3G(1) of the RPA, Seller Credit to Buyer, is a general seller credit applied toward the buyer's allowable closing costs and prepaid items, not down payment. How to fill it out. 1. Enter the dollar amount, e.g., $12,000. 2. The label on the form already reads for closing costs. This signals escrow/lender that funds must be used for allowable buyer costs, rate buy-down points, lender fees, title and escrow, prepaid taxes and insurance, HOA transfer, etc. Be aware that 1. Lender caps apply. Different programs cap seller credits, often a few % of price. If your credit exceeds what the loan allows, the excess will be forfeited unless you reprice or restructure. 2. Credits cannot be used for the down payment. 3. To target a rate buy-down, keep 3G(1) and simply instruct escrow. Apply to interest rate reduction first. You can also note that in G2 below. Section 3G, 2 additional seller credit terms, does not include buyer-broker compensation. It is a free text space to direct how the G1 credit is used or to add conditions. When to use it. 1. Prioritize application. First to permanent rate buy-down, remainder to other allowable closing costs. 2. Tied to inspection/appraisal. Credit to remain even if appraisal exceeds price. 3. Make it percentage-based. Seller to credit 2% of purchase price toward buyer's allowable costs. 4. Spread across points, up to 2 points for rate reduction, balance to other costs. Avoid putting buyer's broker compensation here. G2 specifically excludes it. Use G3 for that. Section 3G3, Seller Payment to compensate buyers. What is it? If offered, the seller pays the buyer's broker from transaction proceeds at close. How to fill it out. 1. Check the box to make this part of the offer. 2. Choose the structure the form provides. A. % of final purchase price, e.g., 2% and an optional additional flat amount, or B. Flat dollar box. Use that when you want a flat fee only, e.g., $9,500. Key points to remember. 1. This is separate from G1, seller credit. Lenders treat broker compensation differently from closing cost credits. 2. If the seller agrees, escrow pays the buyer's broker on the settlement statement from seller proceeds. 3. The buyer should also have a written buyer-broker agreement, outside the RPA, that states the compensation and what happens if the seller doesn't pay all of it. Common mistakes to avoid: putting broker comp in G2 instead of G3. Forgetting to specify % versus flat or both if your form allows. Not aligning your buyer-broker agreement with what's written in G3. Section H1, Verification of all cash, sufficient funds. It is a proof that the buyer has all funds needed if this is an all-cash offer, or, in mixed deals, proof of any portion represented as cash. How to complete this section. 1. Choose attached to the offer, or 2. Choose 3 or more days after acceptance. You can also choose 3 or less days after acceptance. 3. Acceptable docs. Recent bank/credit union statements, verification letter from a financial institution, escrow/1031 statements, or proof of liquid investment accounts. Redact account numbers, but keep the buyer's name and balance visible. Remember, if it's not an all-cash offer, you'll usually rely on H2 for down payment/closing cost funds instead. Section H2, Verification of down payment and closing costs. It is the proof of the cash the buyer will bring in addition to loans. How to complete this section. 1. Select attached to the offer or within 3 or more days after acceptance. 2. Provide statements showing available balances sufficient for down payment plus closing costs, net of any seller credits. Remember, If funds come from a gift, show the gift letter and, when requested by lender, donor's ability. If funds will come from an asset sale, note the timeline and provide evidence of sale or liquidity. Section 3H, 3 Verification of Loan Application, is the evidence that the buyer has applied for the loan and the lender has reviewed their file to the level you check. How to complete this section. Choose Attached to the offer or within 3 or more days. Then check the level you are providing. A. Pre-qualification. Discussion/initial data only, minimal verification. B. Pre-approval. Credit pulled plus documents reviewed, income/assets/debts, with automated findings, still subject to conditions. C. Fully underwritten pre-approval. An underwriter, not just AUS, has reviewed and issued a conditional approval, strongest form short of final loan approval. What to attach? A. Lender letter matching the loan terms you wrote in Section 3E. B. If available, AUS findings, DUs/LP, conditional approval, and proof of application, LE/AEI dates. Remember, 1. Make sure the names, program, and loan amounts on the lender letter match E1/E2. 2. If you changed price or credits during countering, ask the lender to reissue the letter to match.